Welcome to Bears in Exile. Today is Saturday, April the 21st, and this is the weekend market overview, looking at the all that stuff that we always look at. How about that? Alright, well, it was a fairly interesting day on Friday, mixed. The Dow being up 65 points, as we can see here. And yeah, it cut its highs off at about the halfway mark. So kind of interesting that it looks exactly the same as the spinning top from Thursday without the bottom shadow. But other than that, it's like a twin. Kind of interesting. We can see the middle Bollinger Band attempting to get across underneath. Warning for bears. We're able to hold above the major price, or the lower price consensus level once again, but we're still a good ways away from the major price consensus level. Not really much of anything to say there. Doing more damage to the bar, and it appears to be attempting to very lazily bounce off of it. Beyond that, 14-day RSI moving average ticking down, stochastics mixed up on the CCI, sideways on the RSI, sloping up on the MACD histogram potential warning sign, and a slight uptick on the MACD itself, looking for a bullish cross. So it is poised in a fairly decent arrangement for a bounce up, but certainly it's not really showing too much in the way of strength other than its ability to hold its position. So I hope it bounces up a little bit. I just don't want it ticking out this previous high. Looking at volume at price, we can see that it is holding right at this major level from the last month. That's what's giving it its support. And yeah, there's a little bit below that. But we can also see that we have a major resistance up here before it gets to the previous high. So, this little range here needs to break out of, not that it's such a small range, but that is where we are. And if we look at the current volume situation, we can see that, yes, pretty much it's all negative, but we have a few items of concern. The unbalanced volume is about to turn green. The volume-weighted MACD is running out of space. It's going to turn green before too long. And the dual volume flow, yeah, it has a little ways to go, but it's going to run out of room here pretty quickly, maybe in the next 3 days or so. Which isn't to say that it's all bullish, because certainly the accumulation distribution is very, very high. It could go negative at any point. If that were to happen, they would have 5 reds, and the ones that were worried about going positive, like unbalanced volume, could whipsaw, as you can see here. Up, down, up, down, up, down. So, potentially, you could have 5 reds. I think it'll take a little bit of time, but which would be enough time for there to be a bit of a small pop. But once accumulation distribution goes really negative, I think it's going to have a really hard time. So hopefully by the end of this coming week, that's what I'm hoping for. A little pop up, and then hopefully enough to test the previous floor, but that's a little bit of speculation there. SPX, little gravestone doji, not especially useful since it's right smack dab in the middle of this range. 14-day RSI moving average still ticking down, stochastics mixed up on the CCI, down on the RSI, sloping up slightly on the MACD histogram, MACD still ticking down. Very mixed. Everyone's just waiting for Apple, waiting for further earnings news and Euroland news. I mean, they're going to be talking that up like crazy over this weekend. You have the presidential elections for France going on, and if the one guy wins, the market probably rallies. The other guy wins, the market probably tanks. So very, very interesting. CompQ, the NASDAQ, now the weakest of all the major indexes. It wasn't able to break the low from Thursday, unfortunately, and we still have this floor area here to deal with. 14-day RSI moving average ticking down, stochastics mixed, down on the CCI, sideways on the RSI, sideways on the MACD histogram, and down on the MACD, much weaker. Looking at, oh, I can't look at that. Haha. Alright, I can't look at the volume because I don't have volume data on CompQ. The VIX. Yeah, I was really hoping this one would be able to get and stay above 18. It did not happen, ending with a little hammer. Could be that the hammer will be a reversal since we went up here, it's come down. This could be the bottom of a small range. So that's not bad. The 14-day RSI moving average still has not hooked over, but boy, that could happen at any time. So we've been talking about that being a problem. Stochastics heading down, CCI down, RSI down, MACD heading down, looking for a bearish cross, MACD histogram sloping down. This is still a warning sign, so be careful. Still above the upper price consensus level, but still, yes, it's a warning sign. That long-term moving average bar taking really bad damage by the time this is over. Even if this is a failure, it's going to succeed in really beating the heck out of the long-term moving averages. Middle Bollinger Band going for a cross, so another warning sign. XOI oil, it just cannot break this floor, and just holding, just standing put right where it is. 14-day RSI moving average leveling out completely, possible warning sign. Stochastics mixed, up on the CCI, down on the RSI, sloping up on the MACD histogram, warning sign. MACD going sideways. Yep, if this one's going to make a move here pretty soon, it's going to be pretty soon. So move up would definitely be very bullish for the market, especially if it's able to recover the 200-day moving average. Yeah, we need some more time. This has just been a crazy hold right here. TNA. Inverse hammer, not in a position to really make use of it. Holding in this little range here. 14-day RSI moving average still ticking down. And yeah, it still has plenty of room that it could move. And we do have the stochastics mixed, CCI up, RSI up, histogram sloping up, MACD ticking up, looking for a bullish cross. So yet another reason why a bump up in the overall market to some extent is very likely. So I don't think that it'll take out the previous highs. I think it'll be a bump up, help reset the charts a little bit, and then fall back to earth. UUP, very important, and look at that. That's, I mean, it went down. The Dow was up. The SPX was modestly up. Did not reflect the drop in the dollar to the extent that that it should have. 14-day RSI moving average going sideways. Stochastics still going down. CCI down. RSI down. MACD bearish cross, slightly up on the MACD histogram. Kind of a mess, hitting the lower Bollinger Band, middle Bollinger Band, going in for the cross. Short-term moving average is pointing down, breaking away from the double flat line. Yeah, we could have some short-term problems with this. We have this previous floor. We're not very far away from it. Break the 200-day moving average. We'll probably take out this floor as well. The more important one will be the previous floor back here at 2196. If that were to break, holy moly, big trouble for the bears. I noticed at the end of the day on Friday, FXE was doing pretty darn good, recapturing 1.32. It's getting close to the upper Bollinger Band. It's getting close to the major price consensus level. The middle Bollinger Band is going for the cross to help lift it. 14-day RSI moving average ticking down slightly, stochastics on the way up, CCI up, RSI up, histogram up, MACD looking for a bullish cross. Yes, this will be good for the bulls. So another warning sign. GLD. Still pathetic. Still nothing really to say. 14-day ticking up, stochastics down, CCI down, RSI down, histogram sideways, MACD sideways. There just isn't a very good signal at the moment. Still holding below the lower price consensus level. I just don't have too much to comment on this one. There just isn't much to say. SLV. More of the same, but looking better than gold. A little spinning top, holding above the upper price consensus level. Stochastics up, 14-day RSI moving average up, down on the CCI, down on the RSI, slightly, ever so slightly up on the MACD histogram and up on the MACD. Not too much to say until we leave this line. XLF, the financials, doing very poorly. A couple weeks ago we said financials were horrible, and yeah, it's could have broken the Thursday low, but it didn't. Still an ugly candle. 14 days still ticking down. Stochastics mix, CCI down, RSI down, histogram going sideways, MACD down. Do I think that we could have a retest of the floor while everything else is getting a slight pop? Yes, that's entirely possible. And just poor looking, wearing away at the bar. All it needs is a little more penetration into it. Notice that the middle Bollinger Band is still above everything. Not trying to do a cross yet, like so many of the other symbols. Apple, very critical time for Apple. Getting right down to the previous recent floor, even peaking below it. That is a bad sign for Apple bulls. Closing below, once again, the major price consensus level, middle Bollinger Band, all kinds of room above the short-term moving averages and the real bodies of the candle. Down on the 14-day RSI moving average, down on the stochastics, down on the CCI, sideways on the RSI, MACD histogram ticking down, MACD ticking down, and the only thing about this, MACD histogram is so darn low. That's just so not typical for Apple, and with the descent that it's had, it just makes me pause for a moment. But other than that, it looks really good for the bears, especially if we can close below the previous low. But earnings just a couple days away, so be very, very interesting. GE trying to get a better read on the Dow. Look at that. We were thinking that the Dow would get a bump up, and GE is already getting its bump up. Closing this gap, spinning top, middle Bollinger Band going in for a cross. 14-day RSI moving average still ticking down, but CCI, the stochastics mix, CCI up, RSI up, histogram up, MACD up, looking for a bullish cross. So yes, plenty of warning signs here, and this should foretell some on the Dow that it's doing better than the Dow positioning wise. Definitely is a warning sign. So short-term pop up, and then hopefully a crap out. So we shall see. Starbucks. Tried this one on Friday, got stopped out break even. Unfortunately, it didn't get more to the downside than I would have hoped on that day, all over the place. And 14-day RSI moving average still ticking down, stochastics down, but starting to curl. Down on the CCI, up on the RSI, bearish cross on the MACD, down on the MACD histogram. Definitely more bearish than bullish, but we're going to see what happens when the market gets its little bump, if it's going to be enough to turn the stochastics around. So very early, has lots of room to move to the downside when the time is right. The time will be coming, and it just is not there yet. Um, what else could we look at? Hope to do an update to Vegas Baby this weekend. Hope to do an in-depth look at the financials and their weakness this weekend. Is there anything else I can look at? Oh, how about the stinking VXX? I don't know why I keep looking at this one. It's just for fun, but still, it's a depressing fun, I suppose. Middle Bollinger Band going for a cross, still below the major price consensus level. Short-term moving averages pointing down. Stochastics sideways and down. Up on the 14-day RSI moving average. Down on the CCI. Histogram topping out, or I'm sorry, the MACD topping out. Histogram sloping down. Yeah, it doesn't look that great. Which does go hand in hand with some of the warning signs on the VIX. So I suppose it's tracking the way that it should, but still. And I think that's going to be it. A couple more videos this weekend. As always, all investing decisions are your own. This charting video are for entertainment, educational, and consumption of time purposes only. Thank you.